Elon Musk seems to be taking advantage of it.
The other thing that many of the bulls in Tesla like is the China story, and also worth noting from Tesla yesterday came an announcement that sounded a little bit more cautious on the impact from the coronavirus, I must say, because previously the CFO had indicated it wouldn't be much of an impact because the Tesla factory in Shanghai is just getting going. But yesterday, I'm not sure if we have that statement to bring up or not, but we did talk about the fact that they warned it could have more of a material impact if some of the supply issues tied to production go on longer than they anticipate.
And we also don't know how much of the facilities come back online. We don't have those details, right? What is the capacity utilization? That's so key to understanding where the production process stands as of now.
So from the supply side, but also from the demand side, right? Because we're talking about if there's a huge growth to the economy, a huge knock-on growth, to the impact, whether or not the demand for these high-end vehicles will still be there.
And they're talking about mass production of, a mass brand, mass rollout really of these cars. So I don't know whether the demand environment would be supportive for the foreseeable future.
Well, we'll leave it there. You decide. Tweet us. Tell us your opinion. And as we head into a quick break here, take a look at how shares of Alibaba are doing in Hong Kong. As you can see, they are slipping just about 0.3%. The company has warned that revenue growth for the current quarter will be hit by China's virus outbreak.
A similar tone over in India, with Prime Minister Narendra Modi himself monitoring the situation. We will speak with India's Health Minister, Dr. Harshvardhan, on India's measures to curb the outbreak. All of that coming up in the next hour.
Good morning to you and welcome back to Street Signs on this Friday. I'm Nancy Hungerford.
A very good morning to all our viewers. Happy Valentine's Day to everybody. I'm Tanveer Gill. To your headlines this hour then. Asian investors feeling jittery as China reports another surge in the number of COVID-19 cases, using its expanded clinical diagnosis, bringing the global infection tally to over 65,000.
Nissan shares slumping to a decade low in Tokyo. The automaker slashes its full-year outlook and braces for more cost cuts after posting its first quarterly net loss since the global financial crisis.
Plus, like the rest of Asia, India is also on guard against the COVID-19 virus outbreak. We'll speak more with the country's health minister, Dr. Harshvardhan, coming up on the show this hour.
Live from CNBC studio at the Singapore Exchange, this is Street Signs.
Asian markets looking like this right now, celebrating Valentine's Day with more green on the screen than red. You have some of the main markets in the New Zealand market as well as the Nikkei 225 down about 0.5% or so. For the NZX, we are down about 0.25%. But for the other markets, we are holding up actually quite nicely. There's been an intraday bounce in the works, which we are seeing across the major indices and for the peripheral markets as well. Especially for the mainland China markets and the Hong Kong indices, things are looking up. To the top story, total global confirmed cases for coronavirus now hitting over 65,000. Let's get out to Emily Tan, who's looking at the action, marking the action in Greater China, and joins us with the very latest on that. Em, good morning.
Hi, good morning, Tanvir, and a nice outperformance with the Hong Kong and China markets, with the Hang Seng Index rallying some 200 points. We're 90 minutes into the trading day, and the market looking like this. Quite a bit of green that we were showing you. We've got the Shenzhen component up 1.5%. The Shanghai Composite more modest, 0.3% gain. But the Hang Seng is really chugging along nicely here. 27,949. We're looking at resistance at the 28,000 level. Pull-up shares of Alibaba. This is the most valuable stock in the Hong Kong market, also a proxy for consumer spending in China. And they are warning about a hit to the global economy as well as a significant impact on the Chinese one. This is all to do with COVID-19. You don't have to guess. They reported their report card for the fiscal Q3, and it was a beat on both the top and bottom line, boosted by the Global Shopping Festival. Profits up 58% to $7.5 billion. Now, the company's chairman and CEO saying that the outbreak is having a significant impact on China's economy, and that will spill over into the global economy as well. They cannot at this point accurately estimate the full financial impact, but they are expecting that it'll be impacting negatively the revenue growth rate in the current quarter. Alibaba shares down about 0.25%, which is pairing earlier losses. It could have gone down as much as 1.5%, which is the discount in which the U.S. traded shares are trading at against Alibaba Hong Kong shares before the market opened today. That's how much it lost in U.S. trade on the back of the report card and the commentary coming through. We're looking at the auto space as well as the China car sales for the month of January, showing its biggest drop for the first month of this year, down 22% to 1.7 million units. And the forecast is that weakness will continue. February could see a dive of more than 30%. Now, for the full year, sales could drop something like 5%, but that is if and only if the coronavirus tapers off by the month of April. This is the world's biggest auto market, and not only is it getting hit by a slowing Chinese economy, the ongoing trade war with the United States, but you couple together with that the coronavirus and all the production halts. On that note, we are watching as the production is resuming slowly. According to the tally, 59 out of 183 production bases have resumed, so that means less than half. And 1 million units of cars are expected to be impacted as a result of this resumption of production at the factories, taking it at their own pace. Only Great Wall Motor shares here traded in the positive, up 0.4%. Geely Auto, Dongfeng Motor, and BYD shares all to the downside. We're looking to Sasa shares as well, as the company confirming to CNBC that it's going to be laying off 400 of its employees, also docking their pay. Having staff in the back office as well as pay cuts of between 10 and 40% for the next 3 months. It'll be a level of 40% for the senior management for the next 3 months, 10 to 15% for other staff. This is in addition to the 75% pay cut for executive directors that was announced earlier. All of these cuts will help Sasa save something like 30% in costs. Also, for the next coming months, the staff will be manning shifts. So this is to reduce the number of staff on duty as we have a fall fall in the number of customers going into the Sasa stores. Sasa shares are gaining momentum in today's trade, now up 2% on the back of this. We're traded at $1.49. So this, of course, as many of the retailers getting impacted by the COVID-19 as we continue to watch the big impact on the different markets around the world. Nancy, it's back to you.
Emily, thank you very much for that update. And of course, as Em was just talking through some of the expectations and the hit to the auto industry in China, that's really having global reverberations as well. We know it's been an impact for some of the South Korean makers. And I just want to walk you through some of the lines we are getting out of the South Korea finance minister and the central bank chief at this stage. The central bank chief noting that the impact on manufacturers from the coronavirus spread has begun to materialize. Also, the finance minister warning that market volatility may increase again, depending on the pace of the coronavirus spread. So with that in mind, the finance minister is saying they will take stern market stability measures swiftly if needed. Also that they will deploy all available policy measures to boost domestic investment. They've noted that the coronavirus spread has a big direct and indirect impact on the local economy. So we expect to hear more of these comments coming regionally from authorities, no doubt about it, as we watch this toll. Well, with that, let's bring in Rob Subaraman, who is the head of global macro research at Nomura, and he joins us right here at the SGX as our guest host this hour. Rob, good to have you on the program. I mean, what we're hearing from the South Korea finance minister reflects what we've heard from others as well, that they'll do whatever it takes in the way of stimulus measures to offset the impact economically from this coronavirus. But at this stage, it's so hard to predict what that impact will be. I mean, do you think markets have a good grasp of what will take place?
No, I don't. I think there's basically the way we're looking at it is there's two channels. One's pretty certain. The other one's very uncertain. The certain one is China has been hit very hard by this coronavirus. There's been lockdown in many cities. And so in a way, the damage to China's economy this quarter has already been done. So, you know, even if the lockdown...
How long does it last? I think that's the concern, right?
That's the concern. I think optimistically, if you believe the lockdown is going to start easing at the end of this month, which is pretty quick, even in that case, with what's happened through February, Q1 GDP growth on our estimates is going to be around 3.8%, so down 2.2 percentage points. And so what is certain is what's going to happen to China in terms of, the demand shock from the fear factor, the supply disruptions. The downturn in growth in China is going to have big spillover effects on the rest of the world. China's just too big, too interconnected.
Yeah. So what's going on with markets? Because they don't seem overly concerned. Sure, we've had an impact here in Asia, but considering the things, I mean, today looking pretty calm, and the U.S. is at record levels.
So I think the markets are looking at the second factor, which is the risk of the direct effects. So instead of indirect spillovers, it's what if the virus actually starts to really accelerate with infections in other countries. And so other countries become like China, and they have the fear factor running high, supply disruptions. I don't think that's really happened yet. Maybe a little bit here in Singapore and Hong Kong, but generally, I think what the markets are taking a bit of optimism around is the rate of increase in daily infections look like it's not accelerating. In fact, it could be easing off a bit. But I think what they're missing is the damage to China is going to have big spillover effects. And the other thing is we don't know for sure what's going to happen to COVID-19. The risk is there could be a second wave. There was a second wave around SARS. So overall, we're still cautious.
No, but the markets, if you take the markets to be an aggregation of opinions, right, then it seems like a lot of people, even though what you're saying is essentially striking a note of caution, a lot of people among market participants believe that this is something that the markets can override on. And given that it's a liquidity-driven rally, they're looking at every opportunity, every dip to get in.
I think so. And I think the markets are looking at the playbook of SARS. And what we found there was it was a big hit to growth in the countries that were most affected, but it was a V-shaped recovery. So they're saying, oh, yes, it's going to have an effect on growth, but it'll be short-term and there'll be a rebound because of all the pent-up demand and production. What we think markets might be missing is the depth of the V could be worse than people think. So the economic data we start getting for February could be a lot worse than people think.
And this is a point that Nancy flagged earlier in the day. It's coming to light now as we speak because the Korean central bank chief is talking about how the M2 money supply measure in the region has gone up 7.9% year on year versus a level of 7.7% in November, which is the fastest growth since Feb 2016. And they believe that the impact on manufacturers from coronavirus spread has only began materializing. Now, what that essentially means is that if money is sloshing around and money supply is going up, the risk of inflation picking up or rising suddenly and swiftly would put things, in a bit of a stall as well, especially at a time when the downside risks to growth are increasing.
Yeah, Tony, you raised an interesting thing. Everyone focuses on the growth from this shock, but what happens to inflation? To be honest, for economists, it's really hard to tell because it's a demand and supply shock. So demand and supply are going down. We're trying to work out which one goes down more.
Exactly.
And I'd say at Nomura, we think the risk is inflation rises.
You do think that?
We do think
See, that's
that.
interesting because everyone says, oh, don't worry, the central banks can cut. There's plenty of room, especially in China, but they will be more limited if inflation becomes a problem.
Well, they'll be cautious, but it's going to be a temporary rise.
Yeah.
So they should look through that. The reason we think it could rise is because the supply disruptions are mainly in China. Demand, the fear factor isn't as bad outside China. So the supply chain, if there's problems, there could be shortages of durable goods. And then the other thing is there could be a shortage of food in China, which means China has to import more food, and that could put pressure on food prices. Other commodities like oil and hard commodities, base metals, they're under downward pressure. That makes sense. But food prices could go up. And in Asia, food has the biggest weighting in the CPI.
But I think if South Korea is talking about M2 money supply going up, I think, and South Korea is not even directly impacted because of the virus, I think that's a red flag.
Something to watch for sure.
Okay, Rob, stay on with us. Lots more to discuss with you as we go along. We are headed for a short break right now, but let's quickly check on stocks in South Korea before we do that. Lotte Shopping has announced plans to sell 200 of its 700 brick-and-mortar stores. The company also says its net loss jumped to more than 850 billion won in the last financial year. Shares looking like this at last check, down 2.5%. We'll be back in 2 minutes. Welcome back to Street Signs. Stocks in Sydney are edging higher today. Will Cluris is tracking the market for us and joins us with the very latest. Will, good morning once again.
Good morning again, Tanvi. We're actually seeing a little bit of a lunchtime rally as well. The ASX 200 is up by around 0.4%, so it's sitting pretty above that 7100 mark at 71.31. The Australians are also finding their legs a little bit. It's up to 67.24 cents, but it really has been the strength of the financials today because we do have all of those commodity plays well in the red. So if you take a look at the boards and look at the big four banks, they're absolutely surging. Now, partly this is due to some upgrades when it does come to broker calls or analyst calls on these major banks, particularly the NAB, because they actually saw quite a positive set of numbers when you do look at their Q1 trading update that came through yesterday. Their NIMs surprised to the upside. Their cash earnings were relatively strong considering all the challenges that the Australian banking sector is now facing, especially within this low rate environment. Perhaps the chances easing of a further rate cut in March and perhaps even in April has helped them somewhat. But taking a look there, you've got the CBA well over $90, the Westpac also up by 1.22, so it is a pretty strong showing from these major banks. Also, I want to get you across an interesting story. Now, you might remember back last year when Bellamy's was bought out by China Mengniu Dairy for $1.5 billion. Now, we've actually had ASIC lay charges against someone who actually held 14% of Bellamy's. Her name's Jan Cameron. She actually was also a founder over at Kathmandu, and basically what they're saying is she had 14.7% in a privately held company, and that she hadn't declared that to regulators and to the relevant authorities. So she booked around $300 million from the sale of Bellamy's, and if she is found to be guilty, she faces up to 5 years in prison. So this is a pretty interesting development when it does come to this Bellamy sale, because that was pushed through by the Australian government and the Treasurer late last year, despite some protestations from people within the dairy market. And just quickly, I want to get you across Linus, because despite the fact that a lot of sources now are reporting that we are going to see them get that Malaysian licence, they're down by 3%, but it has to also be remembered, I suppose, that they did close 8% higher yesterday. Guys, back to you.
All right, well, thanks very much for that. We'll take a short break on that note. When we come back, more on the markets and macros. do you say Singapore would be the worst hit? Because to my mind, Hong Kong would be a double whammy for them, given
So Hong Kong is by far the worst in our view. But Singapore and Thailand are probably...
What about Australia? They had the bushfires, then they've had this.
So it's those three, Hong Kong, Singapore, Thailand, and then the next rung would be countries like Australia, Korea, Taiwan, which are affected.
India, largely insulated, you think?
India in the Asia Pac is probably the least affected. But the reality, when we look at 26 major economies around the world, the majority of the ones in the top 10 are in Asia.
You know, you never want to talk about opportunities in this type of scenario, especially when so many people have been impacted. But unfortunately, it sometimes is a question we have to ask in terms of economies that may, like India, see any sort of redistribution of supply chains that could be a benefit to their economy. That was a question we talked about with the guest the other day, who said it is a time that people are reconsidering their supply chains. I mean, do you think that could benefit India in a way?
I think so. When you think about it, that's already happening with the US-China trade war and all the tariffs. There's already been multinationals thinking about and looking at relocating production away from China, and I think ASEAN and India have benefited a bit. Now with COVID-19, the reality is a lot of these big epidemics have started in China. The pandemics globally, many of them started in China, including SARS. So given China is so important now compared to 17 years ago, is world governments and multinationals going to say we've got too many eggs in one basket in China, we need to diversify more? I think that's possible, a possible long-lasting effect from this, where there is more diversification of supply chains to ASEAN and India.
The only counter-argument I'm making to that thought process is that it's taken China almost a decade to build this kind of capacity and scale in manufacturing, to be the manufacturing hub in the world. This is not a solution in terms of reorientation of supply chains that can happen, redistribution of supply chains in and around the region, that diversification can happen in a matter of a few years. Forget about a few months.
It takes time. It takes time. And also, you need to have the pull factor. You have to make sure that you're open to foreign investment and that you make it attractive for foreigners to come. So if you have an economy that's got a bad financial sector struggling or other problems, it's more difficult. So you have to get your own house in order as well.
Exactly, because India's been pushing Make in India for the longest while, ever since Prime Minister Modi came to power in 2014. How much success do you think they've achieved on that front in terms of really drawing that interest, drawing that foreign direct investment to be the manufacturing hub? Because the worries are still with red tape and regulation.
Sure. So I don't think it's been very successful so far. I think in the last year there's been a lot of efforts to reinvigorate that with tax breaks and so forth. So let's see.
Let's see. Okay, Rob, stay on with us. We continue our discussion after this very short break. When we come back, we'll also touch base with Japanese markets that will join us after the lunch break. We'll get you up to speed with the Tokyo trade in a bit.
Welcome back to Street Signs on this Friday. Well, the Japanese markets are back in action after the lunch break. Let's bring you the state of play here. You are looking at a move of about 0.4% to the downside. We did get a negative lead from Wall Street, so that's been playing out in the Japanese session, as well as a number of earnings reports. We have seen weakness, especially in Nissan. We'll show you that in just a second. But keep in mind, there you have it. I jumped straight ahead to Nissan. The shares there are off some 9%. And this comes as the car maker did announce its first quarterly net loss in a decade. Also, a massive 78% drop in operating profit for the October to December quarter. Nissan slashed its annual forecast by 43%, so clearly investors are very disappointed this morning. Let's switch the board and show you Rakuten. Well, they did report a full-year net loss of almost 32 billion yen. Well, Rakuten is offloading $1.4 billion worth of shares in technology investments, and the sales include its interest in the stake in Pinterest. Shares are moving higher by about 4%. I also want to give you a look at Nexon. This video game company started out in South Korea, but they are now listed in Tokyo. And the company did beat analyst estimates for Q4 net profit. Shares like that beat. They are moving higher by almost 8%. Tanvir.
Nancy, thanks very much for that. Let's get back to our top story today. We continue to monitor the COVID-19 outbreak in China and the rest of Asia. India may have just reported 3 confirmed cases as of now, but the country is putting 16,000 people under monitor, under surveillance, in a move to prevent an outbreak. And the steps taken include stricter screening at 21 airports across the country. In fact, to take that story forward, we are joined by the Honorable Health Minister of India, Dr. Harsh Vardhan, who joins us live from New Delhi. Rob Subramanian continues to be our guest host this hour. Dr. Harsh Vardhan, thank you very much, sir, for joining us this morning. Could you highlight, for the benefit of our viewers, the precautionary measures that the Health Ministry in India is taking at this critical time?
You see, we started taking action on this in the middle of January. At least 2 weeks before, the World Health Organization declared it as an emergency of international concern. From the day one, we started with all full-blown measures, which included screening of every passenger coming from China, and it started from 7 airports, and then within a few days we started doing it on 21 airports. We created facilities for lab. Started from 1 lab, we created facilities in 15 labs, which now we have the potential of even taking up to 50 labs in the country if there is a need. For every patient who was coming from China, and then of course later on from Thailand and Singapore also, we started the screening, and it was a thermal screening, detailed history, and of course we issued also advisories to all those who are traveling to China or coming back from China. We improved upon our advisories by ensuring that all visas, e-visas are cancelled for all the passengers, foreign passengers coming to India. And then we have put almost 15,000 people on surveillance in all parts of the country. And we have ensured till now 2.5 lakh passengers coming from China, Thailand, Singapore, and now we have added to that list Japan and Korea also. They have been screened, and every patient is being watched, every passenger is being watched. We have done the thermal screening. We have taken detailed history in the aeroplane itself, and whatever is technically possible, we have done that, and I'm sure that we will be able to ensure that coronavirus doesn't enter India in any epidemic proportion in the near future also.
Okay. To that number, Dr. Harsh Vardhan, while there are only 3 confirmed cases, I'm just intrigued to understand why 16,000 people have been brought under surveillance. Is your intelligence telling you that there is fear of an outbreak that you want to contain ahead of time?
You see, I will tell you, I will explain to you. for every passenger coming to India through these flights, which is, I think we have screened by now over 2,000 flights, we do a thermal screening, we take a detailed history, and even if there is a remote suspicion of anything positive in the history in any form, any sore throat, any cold or anything, then we ensure that that passenger, even if he doesn't come out positive in the thermal screening, we keep a watch on it, and through we have a very strong integrated disease surveillance system in the whole country, and we pass on the information about that passenger to our state and district surveillance officers. We have got a very good coordination with all our state governments. The whole issue is being monitored at the highest level in the country, and also with the state governments, we are every day on a daily basis we are coordinating. So they have been kept under watch as a matter of abundant precaution and abundance, you can say, we are ensuring that at least that 2 weeks incubation period, we take absolute precautions, even for those who are coming from outside and don't produce any symptoms or any history. We are advising them home surveillance for about 4 weeks. So it's a matter of precautions only. And for those where there are symptoms, we are taking them up to isolation wards in our hospitals.
Right, sir. Dr. Harshvardhan, there was also reports suggesting that there are few Indians who are stuck on those cruise liners near the port in Japan, and the expectation was that India would be planning to rescue them in some shape or form, because a lot of those Indians are reaching out directly to the health ministry, to the government, saying that they don't want to be abandoned on the ship and that they want to go back home. What is being done in that regard?
You see, let me tell you that we are constantly in touch with our embassies in Japan. We are constantly in touch with the Japanese government. And as per the scientific protocol, the Japan government wants all the passengers to be quarantined on the ship. And I think their quarantine time is finishing on 19th. So we are in touch with the government. Our embassy is in touch with those passengers on that ship. And as soon as the quarantine period is over, we will make adequate arrangements along with the, you can say, consent and involvement of the Japanese government to bring them back to the country.
And sir, I'm interested in your experience as a doctor. I mean, many have pointed to just how contagious or infectious this virus is. But when it comes to the death toll we are watching mostly out of mainland China, what can you tell us about what happens when someone succumbs to this virus? Is it only those who are ill, who have previous illnesses and who are older? I mean, that is mostly what we've seen. But what are you watching in that regard?
I'm sorry, I couldn't follow your question. Could you please repeat it?
Sure. In terms of just how severe this virus is, in terms of what we expect for those not just confirmed cases, but the fatality, how serious is that risk of fatality?
You see, we are taking all possible precautions. As far as this particular virus is concerned, we know that although the mortality rate is quite low, that's about 2%, but the infectivity rate is quite high. So you have to take extreme precautions. That's why we have ensured that there is screening at the airports, there is screening at all the major and minor seaports also, and all our borders with Nepal, our neighboring country, where we also had a positive case. We are screening all those borders, and all the departments of the government of India, whether it is the Defense Ministry, whether it is the Home Ministry, whether it is the Foreign Ministry, whether it is the Shipping Ministry, whether it is the Ministry of Pharmaceuticals, etc., etc. Every concerned ministry is actively involved in ensuring that we plug every possible loophole which can allow the entry of the virus in a big way in the country. And we are sure that we could handle Ebola in 2014, we could handle other diseases, and we can handle this coronavirus also quite well.
Okay, and sir, just one last question on the upcoming visit from President Trump and a large delegation from the United States. We're expecting huge crowds to come out and see President Trump on this visit to India. Are there any special precautions taking place given the large gathering of crowds?
I think anybody can safely travel to India, and irrespective of who the person is. And we are happy that such a big dignitary is coming to India, and we can assure everyone in the United States or any other country that they should not have any hesitation in coming to India. We have taken abundant precautions to ensure that coronavirus is not spreading in India in any epidemic proportion, or otherwise also in a huge country with 1.35 billion population, and where we have screened 2.5 lakh passengers. You can jolly well understand that we could get only 3 positive cases. Out of these 3 positive cases, one has already turned out to be negative, and the patient has been discharged, and the other 2 shall also be soon discharged in a few days.
All right, Dr. Harshvardhan, thank you very much, sir, for joining us with your insights and an update on the situation in India. He seemed quite excited about President Trump's visit.
You've been hearing the whole country's excited. Yeah. So excited you'll be going, right?
Yeah. That's true. Talking about 50,000, 100,000 people actually gathering in the stadium that he'll be attending. Okay. Still to come, time now for a short break. Chinese officials have hit back after Australia extended a ban on visitors from the mainland. Could the move hurt relations between Canberra and its biggest trading partner? We'll ask our next guest, Nick Coyle, China-Australia Chamber of Commerce. He represents the organization in that special interview that's coming up on the other side of this break.